on that basis, what we're seeing with People's Bank of China and also all the other central banks who are doing exactly the same thing is they're sending a very clear signal that they're seeing the purchasing power of fiat currencies declining. So where do you get out? I mean, do you sell dollars for yen? Well, we've just knocked that argument on the head. Euros? No. I mean, the answer, Kai, is that the dollar is the king rat of currencies. It is the number one fiat currency. And if you're going to get out of the dollar, you've got to get out of fiat currencies full stop, and you've got to go into gold. And this is the conclusion that central banks around the world have woken up to. And of course, this also doesn't augur well for US debt funding from foreign sources.
An official Monetary and Financial Institutions Forum survey showed that central banks plan to continue to increase their exposure to gold in the next 12 to 24 months. Since the Russian central bank's dollar holdings were frozen in 2022, several central banks in emerging countries have been rebuilding their gold reserves and repatriating their stocks of gold. In addition, China is no longer accumulating US dollar reserves and is gradually selling off its holdings of US Treasury bonds. Alasdair Macleod, head of research for Goldmoney, discusses the potential collapse of the US dollar and the crucial role of gold in protecting wealth. From a technical perspective, Alasdair Macleod challenges the common perception of rising gold prices, arguing that the real story is the People's Bank of China selling dollars, signaling a decline in their purchasing power. Concurrently, Macleod explains that the trend reflects a falling dollar value, not just a rising gold price, as many in the financial sector view it through a fiat currency lens due to long-standing financialization. Since 2000, the dollar has lost over 27% of its purchasing power, while gold gained an astonishing 530%, underscoring gold's role as a reliable hedge against currency devaluation and economic uncertainty. Considering the gold price movements, Macleod observes that many people rely on charts. He explains that the recent breakout after a long consolidation marks a new bull phase and predicts further increases. Despite current forces, for example, traditionally seen as headwinds for gold, such as positive real yields, a relatively strong US dollar, and supposedly transitory, and now contained inflation, gold is breaking free from these traditional correlations and reaching all-time highs in every currency, including the dollar. Gold prices rose on Monday, helped by a pullback in the dollar. Investors looked forward to US inflation data due later this week, which could influence the Federal Reserve's monetary policy path. Regarding gold's future, Macleod believes its value will rise as fiat currencies decline. He expects this understanding to spread, particularly among Chinese savers, who save 35% of their income, often in bank accounts or gold. Now, we present the clips of Alasdair Macleod's insights from his recent interview with SOAR Financially. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Well, I think there's a misunderstanding about what $2,400 gold price really means. I mean, we can illustrate this with the actions of the People's Bank of China. Read all the headlines. The People's Bank of China has been buying gold. That's actually got it completely the wrong way around. What the People's Bank of China has been doing is selling dollars. The People's Bank of China is in effect saying we think the purchasing power of dollars in our reserves is going down. Now, there are various reasons why that might be the case, but it is the purchasing power of the dollar falling, not the price of gold rising. And this is where everybody gets gold wrong, and particularly the establishment, the bullion banks in London, the swaps on COMEX, all these guys, their only experience has been in a fiat currency environment since particularly the mid-1980s, when everything was financialized with Big Bang in London and so on and so forth. So what they're doing is they're trading something, they account in dollars or they account in euros or pounds or whatever. So their comparison is profits and losses measured in the fiat currencies. But actually in monetary terms, because gold is legal money without counterparty risk everywhere, and euro and mine currency are not counterparty risk free, and they're not used everywhere, you can see where the risk is. The risk is in the fiat currencies. So on that basis, what we're seeing with People's Bank of China and also all the other central banks who are doing exactly the same thing is they're sending a very clear signal that they're seeing the purchasing power of fiat currencies declining. Well, I mean, if you look at the charts, this is what everybody does when they don't understand what's going on. Look at the charts, and you can see there's been a long consolidation period, and so the breakout was bound to be, pretty dramatic. But dramatic initially, and again, talking purely in charting terms, it's the start of a new bull phase. So that's where we are. I think what we've seen sort of part one of the new bull phase, and that was a run up to 24.45 or whatever it got to. We're now consolidating that, and we've been consolidating that for the last 2 months or so, 2 or 3 months. And at some stage, that consolidation will end, and off we go. But as I say, what it's actually about is the declining purchasing power of the dollar, which we're talking about when we look at the gold price, or if you like, the dollar priced in gold. What gives the dollar its value? I mean, we're talking about bits of paper or units on in some sort of electronic account. It's just faith in it. It's just faith. That's all it is. What gives gold its value? Well, you can actually hold it, and it's legal money. This is the point. I remember when we were, when you very kindly invited me to talk in Frankfurt. I made this point to the invited audience, and I don't think people understand this point enough. So gold will continue to appear to rise, but actually, what's happening is that its fiat currency is falling. It's estimated that Chinese households save 35% of their income. Now, 35% of their income is around about $6 trillion on Chinese GDP. So $6 trillion, where does it go? Property, yesterday's story. Stock market, not really. It goes into bank accounts. And it goes into gold. And I think it's increasingly going to go into gold and also silver, because Chinese individuals can't go and buy foreign currencies or foreign stocks or anything like that. They don't have these avenues which we have become accustomed to, whether the avenues are good or bad.
During the interview, Alasdair Macleod dismissed reports of China pausing its gold buying as a government lie, noting that China historically accumulated gold secretly before allowing public ownership in 2002. Meanwhile, he argues this was strategic, given Western market rejection during the bear market, with China quietly amassing an estimated 20,000 tons by then. China, the biggest official sector buyer of gold, is expected to resume its bullion shopping spree once prices ease from the record highs hit in May, as the fundamental case for the metal remains, industry players said at a conference this week. Despite the People's Bank of China's dollar-selling strategy, Macleod asserts China's preference for gold arises from avoiding Keynesian economics and recognizing gold as true money. In a savings-driven economy, millions seek secure investments like gold and silver amid currency fluctuations. Let's get back to the interview.
We all know governments lie through their teeth, so why should we start believing the People's Bank of China? I mean, the fact of the matter is that, and this is fact, long before the Chinese people were allowed by the government to accumulate physical gold, the People's Bank of China was accumulating gold for the state, and it was siphoning this off into various state accounts to hide the degree of gold accumulation. They were appointed to do this by law, and I've got an English copy of this law, back in 1983. And it wasn't until 2002 that they suddenly turned around and said, okay, we'll let the people buy gold, and we will set up the Shanghai Gold Exchange, which is controlled by the People's Bank, incidentally, in order to facilitate them to do this. And then started advertising to people, rush out and buy gold. This was the Chinese government advertising, the merits of owning gold and all the rest of it. So, the state, I reckon that by the time 2002 arrived, and remember, we're looking at a market which was a bear market in gold. gold was being, if you like, rejected by the Western capitalist fiat money system, so much so that it went down to around about $250, from sort of a very brief peak at over $800. And it was during that massive bear market, when everybody in the West was getting rid of gold, that China was quietly sort of buying it in. I mean, they were the hidden buyer of gold, and they've accumulated it. I reckon that by then they'd probably accumulated something like 20,000 tons at contemporary prices. It just made an awful lot of sense because, China wasn't exposed to Keynesian economics. Therefore they understood that gold is true money. What do you do when you're, getting all this foreign inward investment in the sort of 80s and going into the 90s, and then your huge export earnings, and you're controlling the entire foreign exchange situation, because you're not allowing ordinary Chinese people to go out and buy foreign currencies for whatever reason. But given that that is the case, what do? You take those flows and you look at something like, well, it makes sense to put something like 10, 15% of those flows into gold, and that gives you somewhere between 20 and 30,000 tons at contemporary prices. Now, they won't have stopped there, of course. I'm sure that they've continued to accumulate gold from time to time. China is a savings-driven economy. There is absolutely massive quantities of currency which is seeking an investment home. And that is around about 6 trillion a year. And I would have thought that gold and silver would be the most effective hedge for Mrs. Wong or whatever living in one of those mega cities in China. So, that I think is the real driver. I mean, I forget what the People's Bank is doing. And anyway, as I said, I mean, basically the People's Bank is trying to get rid of dollars, and that's actually what's driving its foreign exchange policy.
At its core, gold serves to preserve wealth, while paper currencies erode it over time. History confirms this repeatedly, but many refuse to see history when their eyes yearn for more return without seeing the currency risks frog-boiling them in real time. How do you think ongoing central bank actions, such as increasing gold reserves and reducing dollar holdings, will impact global financial stability in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.